Hello traders. Today we're taking a look at the golden Hen EA. One of my followers asked for an analysis before deciding whether it's really worth the $800. Normally, I don't like reviewing signals that only have 34 trades and just 8 weeks of activity, but why not? Let's check it out and see what makes it special, and why it's ranked among the top this month. This expert works on old only and combining 9 independent trading strategies, each triggered by different market conditions and timeframes. Not grid, martingale, or averaging techniques. There are a lot of EAs lately that pack too many strategies into one expert, and this one seems to follow the same trend. But let's take a closer look and see whether it really can handle different market conditions like he said. Now let's review the live signal. The account shows 56% growth over 8 weeks, roughly 2 months, with a maximum drawdown of 10%. The initial deposit is $350, which means the total profit so far is about $195. The expert currently has a 67% win rate and 32% win-loss, which is make it good performance. What else? Don't forget to read the comments in left side. This is a newly opened account, and the trading results may be of random nature. Sometimes you will found too much growth in the first week or day, or you cannot copy this signal due to the high-risk drawdown or leverage more the 521 trading days, average of 9 trades per week with an average holding time of 5 hours. There are no reviews for the signal yet, even though it already has 6 subscribers. But the price is quite high, $99 per month. So let's think about the real cost. Around $15 for a VPS. $100 for the signal copy. And if you want to pass a prop firm challenge, at least $79 for a 10K FTMO one-step challenge. With the current results, and considering this EA only opens long trades, I don't think you'd be able to cover all those expenses before actually making profit. Moving on to our Excel Pro Trading Analytics for a deeper analysis. The profit factor is 1.9, which is acceptable for swing trading. But hold on, in the backtest screenshots, I'm pretty sure I saw a much higher number than that. Yep. In the test results, the profit factor is 5.59, but that's only for the 2025 backtest, meaning just 1 year of testing, and still no short trades. In other words, all 9 strategies didn't open a single short position, even though the main weekly trend was bullish and we could clearly see bearish movements on the lower timeframes. These are opportunities you simply can't ignore. There are 34 trades in total. On the table to the right, you can see the breakdown of long versus short trades, along with the drawdown and other key statistics. The average winning and losing trade values are basically equal. And of course, there are no winning short trades simply because the EA never opened any shorts in the first place. In the trade quality scorecard, no much to say. Trading style is swing with average of 1 trade per day, no trade for the last 2 days, cost impact are okay. In the best versus worst trade summary, the best trade is actually the very first one, with a profit of $58. That's roughly 30% of the total profits and about 16% growth on the initial deposit, which is huge. From a risk-to-reward perspective, that's impressive, but when you think about it, it also shows that the performance isn't very consistent. $34 of loss is the worst trade. Overall consistency is 43, with perfect lot size consistency and poor consistency in the profits and holding time. This is not a must as he used different strategies for different time frames. No suspicious strategies detected as he said no martingale, no grid or averaging, so the EA is clean from prohibited strategies and ready for prop firms. Now let's check if the real performance can pass a challenge or not. You can fill any prop firm rules. In my case, I will start the check for the 5 airs. This performance fails to pass this challenge because of the max and daily drawdown limits. The other rules are passed, but we have too many daily drawdown limits warnings. The daily drawdown is 3%. And 8 trades exceeding that limit. What about FTMO challenge? This EA would fail to pass it. The maximum and daily drawdown limits are not respected, and even if we choose the one-step FTMO challenge, it still wouldn't pass because it allows only 3% max daily drawdown, which is lower than what this EA produces. Using the filters and chart section, I could dive deeper into the analysis, checking wins versus losses, best and worst hours and days and much more, but I don't want to make the video too long. I'll speed up the video, but I'll make sure to comment on the most important points. The best holding time seems to be between 30 minutes and 4 hours, a good balance for short-term trading. There are a lot of trades overall, but the profit-to-loss ratio is decent. Entries happen at all hours, which means no time filter is being applied. The most active entry times are 12 a.m. and 2 p.m. What's interesting is that the Asia session shows the highest profits, while the London session performs the worst. Now let's plot the trades on the chart to examine the entries and exits. I added the Ichimoku cloud to make the trend easier to visualize. Since this EA only opens long trades, it means it trades only during bullish trends and completely avoids bearish market phases. As we can see, the last trade was a loss, and it was executed right in the middle of a bullish trend. Price was at a new high, but the market pulled back immediately afterward, which explains the loss. One of the key principles of Ichimoku is the behavior of the Kumo, the cloud. When the cloud twists frequently and stays narrow, it usually indicates low volatility or a ranging market. In these conditions, the price is more likely to retrace and return to the lower end of the range. I will explain the Ichimoku system and its strategies in the next video. Let's look at another trade to see whether it follows the same pattern or strategy. This one is also a winning trade, but it didn't catch the start of the trend. Instead, the EA opened the position only after the previous high was broken, which looks more like a range breakout strategy. Another trade, this is not following the same logic as the two first trades, so this is a different strategy. Here's another example, a breakout of the new high. Actually, 3 other trades follow the same strategy. I think it's using the same first strategy, but this time it seems to look back and compare the most recent highs over a certain number of bars, maybe the last 10 or 20 bars. Also, I see a double bottom pattern that gives the bullish sentiment to traders. The strategy here is simple: buy when gold breaks the highest N bars. It's a classic approach that works well specifically for gold, especially during this period and under current geopolitical conditions. In times like these, investors tend to hedge and protect their capital by moving into safe haven assets like gold. Look at this beautiful bearish trend. The expert didn't enter a single trade, even though it claims to combine 9 independent trading strategies, each supposedly triggered by different market conditions and time frames. The same logic applies to the break the lowest N bars rule. It simply didn't work in this bearish move, and it likely won't work reliably across other markets like Forex or indices, even with all 9 strategies. So in my opinion, the expert isn't as smart as it claims to be. As for the third strategy, you can see that it doesn't follow the highest N bar. Instead, the EA goes long after a pullback or when a higher low forms. The same issue appears again in the third strategy, where we see 2 consecutive losing trades. The initial long entry was taken right in the middle of the range, repeating the same type of setup that previously generated the $58 loss, about 16% of the initial deposit. But if every trade carries an 8% risk, that's extremely high for long-term capital preservation. Even a few losses in a row could seriously damage the account. Even though it sometimes generates profits, I believe this third strategy doesn't provide a healthy risk-to-reward ratio. For the rest of the trades, there aren't any new strategies, they're just repeating the same setups we observed in the previous trades. In my reviews, I'm not blaming signal providers or traders who sell their EAs on the market. My focus is on analyzing and critiquing the strategies they use, evaluating whether the price of the expert is justified, and identifying hidden or suspect strategies. Unfortunately, many developers create expert advisors that mostly aim to take clients' money, and if the EA fails, they simply remove it from the market and release the same product under a new name, starting the cycle over again. That's why we also provide optimization advice, drawing from our 12 years of trading experience, to help traders make informed decisions and avoid common pitfalls. In summary, the $800 is far too expensive for a simple classic strategy that I usually code for clients for around $30. While I was recording this video, the total performance was 58%, but after editing, just 2 days later, the performance dropped to 41%. A 17% drop in only 2 days is definitely not a good sign. Still, let's continue monitoring it for a while to see whether the EA can actually open short trades or if it's strictly a long-only system. Thanks for watching and kindly support the channel for more educational videos. Happy trading!